Continue our discussion on Cobra 3 E-mini Dow. Let's take a look at the performance summary. Here is the equity curve. Here is the performance results. Average trade profit is low, and this is without slippage and commission. So let's look at it in recent performance. One of the things you have to consider now is that the Dow is at much higher price levels. And I'm going to show you that here. We are back to 2007 right now. Let's go forward to where we are now, 32,968, and when you get to a certain level, a 1% move is much higher. If you're at 10,000, a 1% move in the Dow is 100 points or $500 average. So the mini Dow contract is $5 a point. So your average daily dollar range would be $500 if the Dow moved 1% a day. When it's at 30,000, 300 points. A 1% move would be 300 points times $5, and that's $1,500 average daily dollar range. Larger average daily dollar ranges can give us more opportunity within reason. You can't trade a market that, the average daily dollar range is about $100 or $200. It's harder to trade. If this gets too large, then it can be more difficult to trade. You have to have more capital, or you have to trade a smaller version of that contract. So this is where we are. We are in a sweet spot on the Dow. You see here, going back to the last 12 months, $9,500 total net profit with 136 trades. That's right at $70 average trade profit. You see in 2021, we are at right at $110. Going back to 2020, just in 2020, 51 average trade profit. So 2020 meets our criteria. We want $50 average trade profit per contract. Going back to about 2015, it's 44 average trade profit. From 2015 forward, right about 44 average trade profit. And then from 2007 forward, it's only 31. So when we add $25 rail and turn slippage and commission, this goes to $6 average trade profit. But you see how this ramps. You see how this does better. It's pretty good here, but overall from here the equity curve starts to accelerate. In 2015 it accelerates, and then it accelerates even more. There's a greater acceleration because the average trade profit is higher. So this contract is at a sweet spot if you're looking for a strategy that backtests to 2007 or further. This does it, but the average trade profit is too low going back in this direction. But from 2020 forward, the average trade profit is high enough. So that can be valid, and that can be something to consider. I'm going to add slippage and commission to this, and it's going to look a lot uglier, but you have to consider the fact where this market is, and it's right here at a sweet spot. Markets can get to a certain level where the volatility is just right. Something like the Nasdaq, sometimes it can get too high. The problem with the Nasdaq lately has been not necessarily that the ranges are too high, but there's just constant retracements of the day's range. And so lots of back and forth. And so let me explain that further. If the market has a good range, but it has a trend, that's tradable. If it has a pullback, that can be tradable. If it has a couple of pullbacks, that can be tradable. Even three waves. But if the market does this, it's harder to trade. You obviously could say, well, you pick the lows here, you put a band around it, but the frequency and the amplitudes are more random than what I'm showing here. So it's harder to trade when a market is constantly retracing in a narrow or a wide range. It can be more difficult than something that does show some trend. Yesterday we had some nice trends, and so we need some trends every now and then. If we don't get any trends and we just get constant wild ranges, that is hard to trade. And the Dow has been a market that's shown better ranges, better trends lately, and so it's a market to consider to trade on Cobra 3 E-mini Nasdaq. Let's take a look now at the back-tested performance results with slippage and commission. Also keep in mind that when a market, I do want to say this, when a market does this, you know, profit targets are definitely necessary. When it does this, and if you get a good entry point, you can ride that trend a little longer. But if it's always coming back and not really going anywhere, you have to have profit targets. And so the profit target version of the Nasdaq works better. A bigger stop loss works better on the Nasdaq. We know the profit target version works well on the E-mini S&P, and this is the case as well in the Dow. If you take the profit target off of this, the recent equity curve is down instead of up. So let's look at this with slippage and commission. So here is the performance with slippage and commission. Doesn't look nearly as good. It's harder to see the opportunity if you don't break it down. But if you look at the equity curve, it looks even worse. But if you understand, you know, why and you know what's been going on in this market and the opportunity at the current ranges, you see that there is opportunities. Plus 12 months, 6,100, 136. And it is certainly a function of the way a market moves. Back here in 2007, it was more trendy, even though the price level was lower. And then in this time period, we have a nice ranges that are nice enough to trade with profit targets. And so that's the opportunity. Doesn't look as good. Certainly during some of these time periods, we're using $25 round turn slippage and commission, which for the Dow would be kind of high during certain time periods in history. We've used that in the S&P, but in the Dow you can trade you know, sometimes $15 is enough in the Dow during low volatility periods. So we're using 25 though, and since this time frame 2015, it's doing well, and it gets even better in 2020. And so that's the opportunity to trade Cobra 3 on the Dow as this market becomes a better market to trade with higher average daily dollar ranges.